What's going on, people? Had a good day? That's good. I had a good day. I just got home. First time looking at the charts. It is almost 6 p.m. on Tuesday, October 11th, 2022. SPY closed today down 0.63%. Currently in after hours, if TradingView is not incorrect, it is up 0.18% in after hours at 35839. Let me just check the actual price, make sure it is not incorrect. So SPY currently sits at 35839, up 0.18% in after hours. If you watched my video yesterday, good. I hope you took something from it. Nothing has changed. We have not created a lower low, slightly lower low on the wick here on the 1 minute on the day, but we have not created a lower low below this golden pocket since 10 o'clock, I'll say. I shouldn't even say that because we did like a fucking freckle more of downside here. But whatever. Nothing has changed. This price action doesn't impress me. Like if I were going to flip bearish, I wouldn't be flipping bearish here. I need confirmation. Just us being slightly below these levels isn't confirmation for me. I've said it a million times. You have to give these levels room to the upside and to the downside when you're trading off of them. Of course, a beautiful, perfect bounce down to the penny is ideal. And that happens a lot. But you do have to wait for the actual pattern and formation to form at or around these levels with a reasonable amount of buffer range to the upside or downside, right? So this is the 08 3.618 to 2.618 golden pocket, 36259 down to 35970. We hit a low of 35563. Still not impressed with the downside momentum, so nothing has changed in my opinion from the video yesterday to today. I know some people in the Discord were sending some stuff and they think the world's going to end. But they think the world's going to end every day along with everyone on fucking Twitter. So delete Twitter. That's my biggest recommendation. Or just like don't look at it every 10 seconds. You should try it. Peace of mind. It makes everything much more clear. Take my word for it. I've flipped to the wrong side because I've been overwhelmed with bullish or bearish sentiment back in like April, early May. And I got burnt because I didn't stick to my own conviction. I let other people's opinions influence my own sentiment towards the market. And it changed my outlook for a short-term move. And I lost money. So I'm laser focused. I don't give a fuck about your chart, his chart, her chart, Wyckoff, Elliott Wave, anything. I'm doing me. All right. So if you want to follow along, congrats. Welcome aboard. Just eliminate most of the noise and just focus on your own craft of licking candles. It'll pay off. Futures down 0.72%. Looks like they already caught up to SPY. Almost. Futures hit a low of 357.925. Currently sitting at 3599.25. Same thing on futures. Golden pocket here between the 08 3.618 and 2.618. I'll reference this on every single chart related to the S&P 500. Again, this isn't impressive price action to the downside that gives me any sort of conviction that I should be entering sub 360 puts, expecting them to go up 500%. So take that with a grain of salt. I'm not a financial advisor. I'm not telling you what to do. I'm just telling you what I'm doing. I'm waiting for true confirmation. So, like, on futures, I'd be watching. I need at least 2 or 3% below this before I consider looking at this to more extreme downside, like another 6% move to the downside. And I'll reference that on SPY because everyone's looking at SPY all the time. Down to like 350, I guess. That would be about 2.15%, 2.3% or so. If it were to drop that low and then not recover into this golden pocket or break back above it at 359.70 or reject off of it, then I'd say, okay, maybe it's time to look at this from a more bearish perspective. The momentum is there. You can use other indicators like EMAs on a macro time frame. You can use money flow index. I just use RSI. I think RSI, it's a lagging indicator, but there's a couple variations of RSI that you can use. There's an indicator called past RSI that I think gives you a pretty good read on the market when relative strength is much higher than it was, let's say, a month ago, but price is much lower, and vice versa. So yeah, I'm keeping it simple. Outlook on SPY for this week is still a retest of 373.17 and 374.93. You do have to get up there for me to maintain my bullish sentiment for the month of October, like this week. I needed around 373.73 to remain strong. And I know we have CPI coming out. We have some shit happening. Everyone's got the panties in a bunch over it. CPI, I don't think it's going to be worse. I think it's going to be better. I think you're going to get a better CPI print than the month prior. And I think the market's going to react to that happening in a positive manner. CPI's come out bad before and it's pumped, and vice versa, so there's really no rhyme or reason to it. That's why I'm looking at this through an empirical lens. If you don't know what the fucking definition of empirical is, Google it. I said in yesterday's video, I'm observing the market. I'm trying to get better at reading the direction of the market based on these parameters that have been set in stone since the historical market events, such as the financial crisis of 2008, the dot-com bubble, 1929, panic of 1873. You can do the Eisenhower recession. You can do the Black Monday crash of the 80s. You can do a lot. There's so many things to look at. There's a flash crash that is pretty interesting. But yeah. So these levels are set in stone for me. They're never going to change. I'm going to be trading off these levels for the rest of my fucking life, or as long as I'm in the market. The 083.618 will always be at 39424. The code of 1.618 was always at 413.75. It always will be. These levels won't change. I'm playing them down to the penny. I do believe pennies matter. And if you disagree with that, then you don't understand high-frequency trading in any way, shape, or form. Things are moving so quickly. We have no chance at catching things like when they're going to happen, right? Like the moment you read an article that comes out, the move has already been made or decided. Most of the articles you're reading that seem like there's a million of the same same articles coming from different people, it's likely that they were computer generated. And to add to that, the computers are reading these articles nowadays. They've learned to read and write. So a quick story about how this can affect markets is Associated Press back in 2014, I think it was 2014, put out an article with a headline about Obama getting blown up at the White House, and the market reacted to it. and it lost billions of dollars in a matter of 15 seconds, and then it bounced right back. So how arrogant of you to believe that you have a chance in hell at accurately anticipating the market based on news cycles. You have no shot in hell, and that's why I'm so heavy on the technical analysis standpoint, because this is all we got, guys. It really is. Unless you have a Bloomberg terminal or some insider information, you got the fucking chart, you got your technical analysis skills, and you have your intuition as a trader. So all the power to you. I'll finish with saying and reiterating again, this price action isn't impressive to the downside. It looks impressive, right? Big red. It's really not. Zoom out. Zoom out. You know, we've been here before, folks. We have been here before. Okay. I'm going to go do things. Have a great night. Good luck tomorrow.